Hello Dairy Today viewers, on behalf of the Market 360 advisors here at Stuart Peterson, I'm Bob Davenport and this is your Dairy Week in Review for February 21st, 2014. So to start out, let's see where our CME dairy components finished at the conclusion of this week's trade. It was a pretty good week overall. Block settled the week at $2.16 1/4, up 5 3/4 cents. Barrels finished the week at $2.15 3/4, up 9 1/2 cents. Cash butter was at $1.78 1/2, up a penny and a half on the week. March whey finished at 63 1/2, down 0.45 cents, and March non-fat dry milk finished at $2.07 around 1/4, up 2 3/4 cents on the week. It was a big week for Class 3 prices yet again after taking a bit of a pause here recently. March finished the week at $21.79, posting a 75-cent gain. March settled at $20.90, up $1.03, and that brings our 2014 average to just shy of $20 at $19.92, up 45 cents on the week. So let's take a look at our weekly block barrel average chart here. Again, after seeing a pretty sizable pullback over the course of the past 2 weeks of around 26 cents, we saw cash cheese rebound a bit, but we didn't quite take back all of last week's losses. Again, the block barrel average finished 7 5/8 cents higher on the week as the buyers really began to filter back into things here after seeing a lot of selling pressure again over the past couple of weeks. So during today's session, blocks finished at $2.16 1/4, up 3 1/4 cents. Barrels settled the day today at $2.15 3/4, up 4 3/4 cents. So just on today's session alone, the average was brought up to $2.16 even, where we did finish up the week, and that's a 4-cent gain just in today's session. So again now, if we can continue to add to the gains we saw this week, the objective on the upside would be that high from a few weeks ago. So let's take a look at our second month milk chart now. So as I mentioned earlier, we did take a little bit of a pause here in this sharp rally that we've seen since August, and that was primarily due to the sell-off that we saw in cash cheese. However, given that cash sold off 26 cents over the course of the past 3 weeks, Class 3 futures really held up pretty nicely. Overall, we saw a pullback of about $1, but really we were just trading within about that dollar range here. We didn't see much of a sizable pullback at all, and we finally broke out of the top side of that range here during this week's session. Now, the majority of that was seen during Friday's session alone, when the March contract posted a gain of 31 cents, taking out that prior January high that we struggled to get above previously. Now, the high this week was 20.83, and we settled at 21.79, so right near the week's high and well off the week's low of 20.99. We had our latest Fonterra Global Dairy Trade Auction this week, and again, that total trade weighted index was down about 1.5% this week. And now taking a look at cheddar alone, which really is has the biggest impact on our domestic dairy market, Fonterra cheddar cheese sold off now for the second auction in a row and came in at the equivalent of $2.20 a pound. That's down 1.7% from the prior auction. So now that puts CME cheddar at only a 4-cent discount to Fonterra. So CME cheddar and global cheddar prices have really been swapping places over the course of the past couple of months, with CME being at a premium and then switching over to a discount here just recently. So what that really says to us is that there's very close competition for cheddar cheese from a global standpoint, and that should continue to be supportive to domestic prices in the short term at least. That's continuing to be the one thing that's really driving milk prices higher, is the strength that we're seeing in cheese and the tight domestic supplies to go along with that. So we also had our January milk production report released this week, and it showed that milk production for January of 2014 came in at 16.1 billion pounds. That's actually up 1% from January of 2013, and is really the first increase that we've seen in a couple of months. If you look back to the last couple of months of 2013, November and December, we didn't really see an increase in production over 2013 levels. So we are starting out the year here 1% 1% above January of 2013. I think what will be important to see now going into February is how production fares this next month. As you can see by the chart here, we typically see a seasonal pullback in production. So I would anticipate seeing that, but I think the important thing to see is if we come in quite a bit above where we were at last year. With how high milk prices are, you could think that production would probably start picking up a little bit more. So something to watch for during our next milk production report. Looking at what we have the week ahead, as far as next week goes, not much as far as reports, but we will have a cold storage report out later this afternoon, so we'll cover those numbers during next week's video. That'll do it for us here today. On behalf of the Market 360 advisors here at Stewart Peterson, thanks for watching and have a great weekend.